Ladies and gentlemen, good day and welcome to the Finolex Cables Limited Q2 FY23 Analyst Conference Call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mamta Samat. Please go ahead.
Thank you, Edie. Good evening, everyone, and thank you for joining us on Finolex Cables Limited Q2 FY23 Analyst Conference Call. Today, we have with us the senior management represented by Mr. Deepak K. Chhabria, Executive Chairman, and Mr. Mahesh Viswanathan, Chief Financial Officer. Before we begin, I would like to say that some of the statements that will be made in today's discussion may be forward-looking in nature. We will begin the call with the opening remarks from the management, after which we will have the forum open for the interactive Q&A session. I will now request the management for the opening remarks. Thank you, and over to you.
Thanks, Mamta. Good afternoon, ladies and gentlemen. I am Mahesh Viswanathan, Chief Financial Officer at Finolex Cables Limited. On behalf of the company, I extend a very warm welcome to all the participants this afternoon. You must have by now had a look at the presentation that is uploaded in our website, as well as the results that were posted 2 days ago. As far as the top line goes, we've had a good quarter. The top line went up by about 17% on a comparable basis. The electrical cables business grew about 12%, and communication cables business grew approximately 54% during the quarter. In volume terms, we witnessed 10% growth in electrical cables, and within the communication cables segment, we have multiple product lines. So those product lines that are metal-based, there the volume growth was about 24%, while the fiber-based products almost doubled. The FMEG products that we have, there the growth was kind of flat overall, partially because in the fan segment there was quite a bit of destocking because of the upcoming changes to the BEE norms, as well as some amount of some effect of the continued inflation on the retail markets. Profit after taxes was about 136 crores, lower than last comparable quarter by about 8%. This is primarily on account of the higher cost inventory that we had at the beginning of the quarter, which was liquidated during the quarter. Also, we took a price reduction in July following the decrease in copper prices. And over this quarter, we have also started spending a little more on market-related activities. During the COVID period, our spends on ads and related market activities was somewhat less, so we are now ramping it up as the volumes start to climb. Overall, on a revenue basis, we saw a decent growth, although inflation continues to be something that is on our radar, and we will have a close watch on that. We do expect the demand momentum to start picking up now, and hope that the rest of the year progresses, at least in revenue terms, on the same basis. On margin terms, we expect to catch up because at the moment, as we speak now, commodity prices seem to have stabilized at a certain level. So as long as there are no more undue blips, one should see the margins climb back. That's about it for the opening remarks from my side. So I'll open it up for questions now, and we are happy to take questions as they come by.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2 to remove yourself from the queue. Participants are requested only to use handsets while asking a question. Ladies and gentlemen, wait a moment while we poll for questions. Our first question is from Sonali Salgaonkar of Jefferies. Please go ahead.
So thank you for the opportunity. I'm sorry I joined in a bit late, so seem to have missed your opening remarks. So, sir, firstly, my question is, you did mention that there was a change in the product mix in cables and wires, especially electrical cables during the quarter, which impacted margins. So could you update us a little bit more on that? And secondly, there seems to be a good revival in communication cables, especially the volumes in optic fiber cables. So what is leading to such a good volume?
Okay. Yes, in our press note, we had talked about a slightly different product mix, which had also impacted the margins. While all the product baskets grew, there was a fairly high growth on the automobile sector, and cables which go into the automobile sector, that growth was fairly significant. And as you know, these are products which are geared towards the auto companies, and while you get volumes, the margins there are fairly thin. And likewise, we had also seen growth in the industrial products, and there again the margins are not as healthy as you would see on the retail products. So these two product lines, the volumes were significantly higher, and that pulled down the margins by, I think, about 80 to 100 basis points.
Got it. So, and about communication?
On the communication side, we are seeing growth. Like I mentioned, we are seeing growth across all the product lines, except I think one. The metal-based products have a volume growth of about 24-25%. Optic fiber has, like I said, doubled in this quarter. In this year, we are one of the primary suppliers to Bharti, and again, both Bharti and Reliance have started investing in fiber over the last few months, and I think that is kicking in. I mean, the 5G rollout is imminent, and I think they're planning for that. So we do expect volumes to continue to be at these levels going forward. And as the 5G rollout accelerates with other players coming in, one should see a healthy trend there. Also today, I think you must have read in the newspapers that BSNL has signed a contract with TCS for their 4G rollout across the country. So they are, and that over a period of time, I'm sure would include fiber as well. And they're also planning their 5G rollout sometime next year. So I think as we go into the future, there will be a continued demand for fiber, and that's good for us.
Got it. So on the demand side, the retail wires or the construction wires, which are about 60-65% of our electrical cables mix. So are you witnessing any softening in construction offtake in Q2?
No, the volumes went up there also. The volumes went specifically in those construction wire products. The volumes went up by about 10% or so.
Got it. But overall, you think demand in the housing industry is normal right now, both in the rural as well as the urban?
I think it is normalizing. We're probably a little shy away from where we were pre-COVID levels, but we're catching up soon, I think.
Got it. So, and on the margins, I mean, we used to be very strong in the electrical cables. Of course, this quarter was had the impact of softening copper. But where do you foresee the margins normalizing? Also, we do remember that a few quarters back you had mentioned that during COVID, you had increased the discounting, which led to impact on the gross margins. Have we stopped that discounting, and where do you think the gross margin should stabilize in the coming quarters?
No, we have not stopped it, although we have moderated that slightly. I think the a steady state level should be around 13-14%. Like I mentioned earlier, this quarter there has been an impact on account of the softening copper prices. Now, as long as stability is maintained, I think we should get back to those numbers.
Got it. And just one last question from my side about the optic fiber prices globally. How are they trending right now? And lastly, our capex expectations.
Capex, like we've been mentioning over the last few quarters, those projects are ongoing, and I think we should be completing them by the end of this financial year, except probably the E-beam might slip into next year. But the rest of the projects that we talked about should be done by the end of this financial year. As far as, what was your next other question? Sorry?
So optic fiber prices, and sorry, one last question on your appliances side, when do you expect to break even?
Sorry, I lost your question again. I'm sorry.
Right. So optic fiber prices globally, how are they trending right now? And lastly, when do you expect to break even on the appliances segment?
Okay. I think we should, as far as appliances segment are concerned, we had spoken about this earlier also. When our turnover on the segment hits about 180 to 200 crores, we should be breaking even at that point in time. And last year we just missed it by I think about 10 or 15 odd crores. So as we grow and hit those numbers, we should be breaking even. It also depends on how much we finally decide to spend on ads on those product lines. So if our ad spends are somewhat similar to what our current run rate is, then I think that 200 number is still valid. If we want to take it up for whatever reason, then that could impact a little bit, but it is in that ballpark. As far as the optic fiber prices are concerned, I think there is a trend towards firming up. We see locally prices firming at around 360 to 380 rupees per kilometer, and it is holding at that level. So I think the demand is climbing up again as major countries overseas start their 5G rollouts. The fear of the pandemic is kind of not there anymore, so you do see announcements around rollouts happening across multiple geographies. So I think the demand is starting to come back.
So what were the prices of optic fiber at the start of this year, which you said is about 360, 380 rupees per kilometer right now?
Around 340, 330, somewhere around that.
Okay, got it, sir. Thank you and all the best.
Our next question is from Anand Jazar of Phillip Capital. Please go ahead.
Thank you for taking my question. Most of my questions are actually answered. Just one thing, sir, and that is actually directed to Deepak sir. There's one concern on a lot of investors' mind, and which is keeping people at bay. And I'm going to just ask so that let's be some clarity on that. So, is the family dispute behind us for good? Any clarity would be really helpful.
I'm actually sorry, I am not able to respond to you on that because the matters are sub judice. So until that clears, I am unable to talk on that particular subject.
All right, that will be all from my side. Thank you.
Our next question is from Shintan Shita of Samishka Capital. Please go ahead.
Thank you for the opportunity and congrats for the good set of numbers. Hope I am audible.
Yes, you are.
Yeah. So, sir, on the growth front, given the festive was slightly early this year, does this volume growth is what we were expecting or is slightly lower than our expectation? And how do we see Q3 panning out in terms of growth given the festives around us, and there was some level of optimism in terms of consumption trend on the upper end side?
On the appliances part, the issue is still around the fan segment because the change in norms is imminent over the next from 1st of January, and that leads to a situation where the trade doesn't want to stock. They don't want to increase their stocks, and at the same time, the newer versions would be slightly more expensive. So they're not very sure about what volumes they would like to keep. So that's a bottleneck that we have to sort out. But I think the demand for lamps or the other product lines are continuing.
And any update on how our distribution strategy is progressing? Any further update around that? Any learning and what more we need to do to reach out to more number of geographies and improve our presence in the market, if you can?
You're talking about the distribution part.
Yes, distribution strategy.
Okay. Those activities continue. I think the last 1.5-2 years, the results are bearing out our move into distribution. We are refining it as we go by because each day you learn something new, and we are improving the digital platform that we have, so that gives us access to more data. Now one needs to mine the data and see trends and what we can learn from that. So it's not a overnight learning, it takes a little bit of time, but I think we are doing the right, or at least moving in the right direction as far as distribution is concerned. And like I mentioned in the beginning, we are also supporting that with additional market spends, not only on visibility but also on on the below the line items. So
right.
So that should improve our penetration in the retail counters.
Right, and in terms of resource, to execute this strategy, are we fully middle level or at the dealer level resource planning? Are we done with that in terms of building the team and heading those teams at the corporate level? How are we placed, and what is the status in that terms?
That will be a goalpost which will keep changing every month, because as you learn, then you get into newer territories. It's not going to be a product that you say at one point in time you are finished with it, but it is improving.
But you see, the network is growing, and when you say dealers, we are talking of a two-tier, which is distribution retailer network instead of dealers.
Right.
We call the dealers in our company as channel partners, who are quite stable, but the growth we are really taking is in the two-tier part, where the retail counters are going on being added with distribution. We put a software in place where we have a distributor retailer on a software, and we can actually control the number of retailers attached to a particular distributor and the billing cycle that goes with it, and there cannot be any cross distribution happening. All that is in place. We can have, to improve retailers' sales, we can have schemes running directly with retailers who are now on the system with us. So many things are happening, and to go on strengthening this kind of network, and we are tracking not just increase in retailers, but to see how many retailers we can have in different bands, for them to buy more and more, to climb, have a larger bucket, So
Correct.
there are various activities being done by the marketing team in that area.
And the team is also tracking what level of wallet share are we getting from a particular retailer, and what's the standard amount of buy that he gets, what increases are happening there. So those information gives them ideas as to okay, where do we need to concentrate now, what do we need to do to secure a particular area and so on.
Correct.
That effort is ongoing.
That's great to hear. And last question from my end, and I'll jump back in queue. Any decision on distribution policy, the cash we hold, and how should we look at that? This is a ongoing question we need to ask as an investor. But
you're asking about the liquid money that we hold.
Correct. How should we look at them? That's an ongoing question. We are bothering with you, but if you have reached to any decision.
No, okay. We are looking at one is the capex that we had announced; those we will complete. The last 2 years we have been a little quiet on the expansion front because of the kind of market environment that one had, COVID and so on. So I think where can that money go? It can go into expansion, it can go into inorganic growth, or it can go back to the shareholders. Those are the only 2-3 avenues that one has. So we do realize that we are sitting on money which at the moment may not look productive, but we are constantly looking for opportunities to deploy that. Only thing, as you know, we are a little bit conservative, so we would like to be reasonably sure before putting our feet into the water.
Sure. I'll join back. Thank you. Thank you for the answer.
Ladies and gentlemen, we just request that questions only relate to the quarterly results of the company. For any other questions, you may write to them. Our next question is from Saket Kapoor of Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Firstly, sir, if you could give some color on our capacity utilization levels, sir, for this quarter and for the first half, for all the 3 categories.
I think the electrical cable plants are nearing 70% utilization at this point in time. And bear in mind, this 70% is including the additions that we had made over the last 12 months. So on the expanded capacity now, we are at about 70%. Going forward, I think if the demand continues the way it is, then we should be reaching about 80-85% over the next 6 months to 9 months. On optic fiber, the fiber production is now close to, we have a capacity of 3 million, and I think we are almost at 75% at this point in time. The other communication products, except for one particular line, the rest are at 75%. LAN in fact is fully booked. Yeah, so on an average, you would say around 75%. There is just one product line which is low at this point in time.
You mentioned LAN, sir, LAN.
Yeah, LAN, yeah.
Okay. And what kind of revenue do we post from the LAN segment?
LAN, yeah, about close to 200 crores a year.
Right, sir. Sir, coming firstly to the electrical cable, firstly to the OFC part, sir. When we look at the communication cable segment, I think that attributes mainly to the OFC, sir, in the product profile, optic fiber cables only, or do we have other products also?
The largest would be OFC there.
Okay. So, sir, why are we having very mere margin, small wafer thin margin in this segment? What are the key reasons for the same?
Well, it is not a trade retail product, and like I said, this year our major volumes have come in from Bharti, where the prices are determined by reverse auction. So the margins there are, you get good volumes, and that keeps your that helps you to absorb your fixed cost completely, but the margins are rather thin, and
the fixed price for the year.
And it's a fixed price for the year. So we also need to then resort to hedging mechanisms so that we are safe from the forex volatilities, because this is one product where the base raw material comes from overseas, and any change to the rupee dollar parity there could impact us.
So a small pointer, then we are sourcing the fibers for the OFCs from totally imported.
No, that's not what I'm saying. The base, which is the glass for the fiber, we source it from overseas. There is just one company in India which makes the glass, and he is a competitor.
So what he means is preforms.
Yes, sir.
We import the preforms and then we draw it into fiber in our plant. So we have a drawing towers, but the preforms are imported.
Correct, sir. And sir, going ahead, do we have the product line for FTTH also, fiber to home and other applications?
Yes, we do. In fact, we are one of the approved suppliers to Reliance and to Bharti. The difference between in revenue from FTTH is while you will get a lot of kilometers, the fiber count there is not as high, because you're talking about fiber reaching your home. What you need is only a single fiber coming into your home, although most companies give you two fibers. The money is more in the long haul connectivity, where the fiber count is 96 or 188 or higher than that.
But sir, still to get the margin profile correct, sir, when we look at other OFC players, are we a small marginalized player that we are only posting 2.5% margin in this cable or OFC cable business, where the demand, I think so, because of the launch of 5G, the fiberization process getting a big kick up now. Then also, sir, only 2% margin. Where is the missing line? When does this is the industry norm, sir, or we have some headwinds because of which the margin is only 2%?
No, that 2% is a composite margin for all the communication products. So communication products would include telephone cables, speaker cables, CCTV applications, LAN cables, coaxial cables, and OFC. So the margin profile for each of these products is slightly different, and the composite number is what you see in what has been published, because the segment is at a total level.
Yeah. Last question on OFC, sir. What is our market share then in this segment currently?
I think of the Indian market, about 18% or so. Slightly under 20 is what I remember.
Yes,
18% is our market share for OFCs.
See, it all depends on what level of investment the government is making at any point in time. A lot of announcements are made, but there is a time lag between when the announcement is made and when the product is actually procured. So who are the regulars every year? So Bharti runs a tender every year. Reliance, earlier on they were taking large quantities, but then they were on their rollout mode at that point in time. Currently they are spending more money on the FTTH. Maybe going forward in the year, in the rest of the year, they will start spending on their 5G rollouts, and that might require more fibers. BSNL has not spent anything over the last few years. Announcements about the BharatNet projects have been coming from time to time, but procurement has been very slow. So while the opportunity size is extremely large, funding has been a constraint for the government, and that's why there is while the market is there, the offtake is very staggered, and one is not really able to predict that.
Sir, if you allow, I have two more questions for electrical cable segment, or shall I join the queue?
No, go ahead, please.
Yes, sir. Sir, for the electrical cable segment, our product profile includes all categories. That means we are present in HV, MV, and LV, or if you could give the specification, or it is only the wires and cables that we go through electrical cable segment.
We are present. We have the capability to do LV, low duty, medium voltage, and high voltage within the company. Bulk of our product offerings would be in the low duty category. Power and high voltage cables, because of their exposure to distribution utilities, we have consciously not taken a very large exposure on those sectors.
So what should be the mix for electrical cable segment, this 880 odd crore revenue, if you could give between the wires and the wired cable segment? Means the cable segment and the wires and cable segment?
Okay, broadly there will be general construction, that's about 60%. Automobiles would be another 10 to 12%. Industrials would be 10 to 12%. Seasonally, agriculture could take another 10%. That depends on the sowing season. And the remaining would be power cables.
Sir, I was industry-wise, okay, I was looking for the cable segment and the wires and cables breakup. That is 60% is wires and cables. That is what.
No. The power cables is about of our total revenue is about 10%.
Okay. Sir, power cables means, sir, the high voltage and the
medium voltage and
high voltage. Yes.
High voltage.
No. Okay. Power cables are also in low voltage in 1 point. When you say 1.1 kV, it's called low voltage.
Okay.
When you will go into 11 kV, 22 kV, 33 kV, it's called medium voltage. And then anything above that, they call it high voltage. So that is the terms used abroad. In our country, the 11 to 33 is called high voltage, and then going higher 66 and 132 and going to 220, 400 kV is extra high voltage. We are in the entire range. In the extra high voltage, we have a joint venture with the Japanese, where we are manufacturing up to 400. Actually, capacity is 500 kV, but we get cables up to 400 kV, which is required in the country. But in Finolex cables, the predominant position is majority in low voltage and some amounts in medium voltage up to 33 kV. Is how we sell in the cable side. But when you are looking at wire, our sales is in wire, 10% let's say in this cable, and 5% in the other products, the broad product mix of the company.
Right. And for the EHV segment, what is the how is the industry shaped up, and do we participate in EPC contracts also, or we are only selling directly to the government?
Yeah, in the EHV, you get both type of orders, just supply of cable, but of course you have to give it with jointing kits and install it, or you have the whole turnkey where you got to lay it, with all the civil work, as well as jointing kits and terminate it from one point to the other point. We do tie up with other people for doing the EPC jobs. Majority is with EPC, and these are large voltage cables you require certain amount of years of experience, certain amount of years of cable which is being operational before they qualify you for quoting for tenders. So there are many roadblocks for newcomers to enter in the business, for even to quote for the tenders for approval. We've crossed all those hurdles now, and while in the past, because of that, we have not had a good run and made some losses, but now we are having a good order booking, which is like close to 10 months of order booking.
No, actually more than that.
More than
that. Close to this year, they have booked almost 300 crores of the orders.
That's 1 year. We have a 1 year order book position now in EHV.
That is to the tune of 300 crores.
Yes, we are doing of 300 crores.
Okay, sir, and then that means the business sentiment for the EHV part is there's a lot of strength in this segment. I think so. The underground cabling also from the government side, does those things are getting traction, or is it for the metro rails also that we are participating?
No, we are participating with metro rails as well as underground with utilities, or even private projects in large plants where they require the large cable underground. We participate everywhere.
Okay, and what is the market share?
Majority of the material is going to utilities.
Okay, sir. And what is our market share? Please, sir, aap boliye.
Market share, no.
I think, again, the market share calculation, if you're looking at it basis, orders won will be around 15 to 20%, but if you're calculating basis execution, at the moment it will be slightly lower than that. It will be probably less than 10%.
Because the order book position has built up now with all the qualifications.
Okay, sir, and we are seeing, sir, come again, sir?
We are still to execute this 300 crores.
Right, sir.
Earlier, we have not been producing and selling 300, right? We just built up in this year a good order book position. So going forward, it looks good.
Okay, sir. And on the raw material front, sir, if you could throw some more light, how is that basket shaping up, and how do we hedge that depending upon the volatility in the commodity prices? If you could give some more color.
Yeah, so you see, we have so many variety of products in copper that there are many sizes and colors. You have to stock and sell the trade items through your depots. We have 26 depots all over the country, and you will have to have at least about 1 month inventory in stock to be able to satisfy the product mix and the demand of the consumer asking for immediate delivery. So raw materials, when you get copper, we buy copper on the average of the month. If you try to hedge it, there is a cost involved. If you take a natural hedge like what we've done, which is taking average of the month, and we price and sell it at the average of the month, except that we have a particular stock with us, which is a 1 month stock. So when the copper prices are going, like in the last quarter it went down, we have to value the stock the way it is in the balance sheet. So basically we are taking a hit as it's coming down, and we are taking a gain when it's going up. Over a long period it evens out, and that's why we don't go and pay a cost for hedging, which would be otherwise a reoccurring cost on a continuous basis. And we have this natural hedge mechanism running while selling our products. But copper has come down from $10,400 to about, it came down to 7,500 to 7,400. Last few days it's gone to 8,000. So it's come down quite a bit in 3 months. And so has PVC come down quite a bit.
Yeah.
PVC prices also come down.
Prices are constantly dropping.
If you were following the pipe companies, you would have seen all their commentaries. Yesterday, in fact, there was a commentary from, I think it was Prince.
Yes, sir.
Yeah, they had also had a issue on the PVC price.
Yeah, because it dropped.
It dropped substantially.
No, it dropped yesterday also, another 3 rupees. It keeps dropping.
Correct, sir. So, right, sir. Lastly, sir, on the raw material basket, what percentage would be, sir, this copper part out of this total 744 raw material consumption, the major component percentage mix, can you provide?
Okay. In a year, out of my material cost, about 65 to 70% is copper.
65 to 70% is copper. And lastly, so on the OFC part also, do we have this? Do we do this interconnect also, or we are only in the OFC segment? I think so. Interconnect is also gaining a lot of traction with this communication business.
Sorry, I didn't follow. What do you mean by interconnect?
Interconnect is the joining of the OFC cable.
No, we are not doing at the moment. We are not on the EPC side or on the connectorization side. It is something that we are exploring. We'll have to see how to take that forward. But at the moment, we are only supplying cables to the consumers. So the consumers could be government, BSNL, BVNL, or any of the other agencies, or the large telcos.
Right. And the copper rods are also for the communication cables only. They are accessories to the same.
Copper rods are primarily for electrical cables. It is for in-house consumption.
Okay. Right. So thank you for all the elaborate answers, sir. And thank you for it, sir. Thank you. Namaskar.
Ladies and gentlemen, just a reminder, if you would wish to ask a question, you're welcome to press star and then 1. Our next question is from Aksh Vora of Roche Financial. Please go ahead.
Hi, sir. Just most of my questions are answered. Just want the optic fiber business or the communication segment. It's a little bit capital intensive business, and we are not making enough money on that. So, is there any plan in distant future that we might demerge it, or we might, sell the business out and focus on the much less capital intensive business with higher margins? Because, at company level, the the ratios, everything has been coming down because of this segment. So, any plans on that, sir?
Actually, fiber optic business has been dropping, like you say, in the past few years. And in our country, the number of customers, the telecom operators also shrunk over the years. And so, it's a B2B product, a tendering business, and a fixed price for a year. These kind of stipulations squeeze margins. But things are changing. The way it is happening now is because of 5G, you will have a lot of demand on fiber optic cables. And for example, there are a number of towers for your wireless phones, and maybe 30 to 35% of these towers are connected by fiber optic cables. In 5G, you will need to cross 85% connectivity of towers with fiber optic for 5G to work successfully. So imagine that number of towers which need to be connected. So for next few years, there would be a lot of demand for fiber optic cable. 5G also requires the cell site to be made smaller. So there is going to be a 3 times growth on the number of towers itself, and those to be connectorized with fiber. And this 5G rollout is happening all over the world, which means the demand for fiber optic cables is worldwide. It's not just in India. So actually, it's a good phase to be in going forward in the fiber optic. I think we will see a good business going forward for the next few years.
In fact, a few years back, I think maybe if you look back at our history, let us say 2017-18, the margins used to be around 8 to 10%. But then you had funding issues in the sector, which have kind of dampened the actual demand in the country. The requirement is very high, but what actually has been laid on the ground has been less because of funding constraints. And that means that such of us who have set up capacities have had to absorb fixed costs and drop the margins over a period. So I think, like Mr. Chabia said, it is a phase. We'll have to go through that because there is massive demand ahead of us. Compared to the numbers, I think we have shared this earlier also. China, for instance, even today consumes close to 400 million kilometers of fiber, whereas we are at 22 million fiber kilometers a year. So there is, while we will not reach the 400 million number ever, because China is geographically much larger than us. For a country of our size, the kind of population that we have, the kind of penetration that you expect people to have in terms of communication abilities, the actual fiber on the ground is far, far too low. That needs to grow.
We have a question from Khadija Mantri of Sharekhan. Please go ahead.
Hello.
Yes, go ahead, please.
So I wanted to know, in the last con call in Q4, you had said that the cumulative price hikes had been about 14 to 15% in FY22, post which we had to take a price cut of 4 to 5%. I would like to know where are our product prices stand as of now, since there has been more decline in the commodity prices, especially copper and aluminium.
No, we had to take about 6 to 7% in Q1 and again 3% in Q2.
Okay.
Okay, so Q1 we did not have a call because the results were announced almost very close after the Q4 results were announced. There was not much of a time gap. So we didn't really have a large message to convey, so we did not have a call at that point in time.
Okay, so the average price cut has been about 10% in the first half.
Yeah.
Okay, sir. And sir, also I would like to know our sales and advertisement expenses as a percentage of revenue. How much it is now, and is it likely to go up further?
Yeah. So what we were at about pre-COVID, we were at around just around 1% of revenue. COVID times, we had obviously dropped that number. We had, in fact, in the year 2020, before COVID hit us, our plan was to take it up to 1.5% of revenue, and we are slowly getting there now.
Okay, sir. And also, the channel inventory, earlier you said that the channel partners are now keeping very low inventory of just about 3 to 5 days. So has it normalized in Q2?
Okay. In Q4, I meant that because prices had gone up at that point in time and people could see the trend reversing, so they were a little careful. I think as they've not loosened the purse strings yet, but as they are seeing demand, they are trying to lift it. So they are trying to be careful with their deployment.
Okay, so but it still hasn't reached the general level of about 30 days.
Yeah, I don't think anybody is sitting on 30 days of inventory.
No, those
days are gone. Those days are gone. They want to place an order in the morning and they want the material by the afternoon.
No, we as a company normally have 30 days or 40 days of inventory, and that's because we have to have some stock at the plants. We have some in the trucks which are moving towards the depots, and then we have 26 depots with different size and color combinations stocking, where to service the consumer you will have to hold 15 days inventory in those depots.
At least.
So for us, there is a stocking of 30 days or slightly more. But retailers normally don't keep that much inventory. They are getting serviced from those depots on a daily or alternative basis.
In fact, after we have started this, gone on the distribution thing, the distributor replenishes the requirement on a weekly or a 2-weekly cycle depending on which market it is.
Okay, sir. Fair enough. Thank you.
Thank you. Our last question is from Drashika Kinka of AV FinCorp. Please go ahead.
Hello, sir. Thank you for the opportunity. And I have a couple of questions. Firstly, a little bit around
Can you speak up, please? Your voice is very low.
Is it audible now?
Still a little low. Okay, you go ahead. Exactly. Let's see. If I have difficulty, I'll ask you again.
Unfortunately, we have lost connection for that line. Our next question is from Surbi Loda of Anandvati Wealth Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So this quarter and last quarter, we have seen a decline in the tax rate. So just wanted to know the reason for the same, and going forward, what will be your guide on the tax rate for this year and next year?
The tax rates at what you see on the financials is net of provisions for deferred taxes. So the applicable rate is 25%, and so that should continue.
Thank you. Thank you, sir.
We have reached the end of the question and answer session. For any further questions, please write to Perfect Relations with your questions. On behalf of Finolex Cables Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
We done?
Yeah, we're done.
Yeah, thank you. We can log out.